Good afternoon, good evening, and welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for August 17, 2008. AccendoTrader.com, effective video trade plans delivered daily. And what we do is we have a bunch of checklists, a bunch of routines that we go through to make sure we're on the right side of our trades, make sure we can see what's coming down the pike, what's going on with the market. And so we want to look at news and check for earnings, but we also want to see what some of the experts are saying about the market and check our sectors to see which ones are trending. And always we want to look at our indexes and see where they are with respect to support and resistance, scan for new trades, set alerts for new trades, and as always, we want to make sure that we have time to spend with our family. So we had a week that really didn't do that much. The market decided to pause and digest its 8% move off the July lows. Last week we saw continued strength in the dollar, which also means that we saw continued weakness in the energy sector, specifically crude, and there were some concerns about a global economic shutdown. And finance was the worst performing sector. We saw with the dollar that it's kind of perceived or presumed that the foreign banks may cut their rates before the U.S. market raised their rates. So the dollar surged this week about 2% and 7% since the July lows. And so we're hoping that will cause a revision, an upward revision in the GDP growth. In our headlines, we see that the retailers were the pocket of strength this week, which is interesting because, we still have high gas prices, high food prices, falling home prices, tightening in the credit, rising unemployment, but the retailers still rallied on. We had Walmart, JCPenney's, and Kohl's all post good earnings, but they all expressed some concerns about the next quarter, the third quarter outlook. And obviously, if we're talking about the energy sector and oil prices being low, one sector that you're going to see is transportation, and then in there is going to be airlines, and they made a nice gain off of some of the oil price lows. In our economic data, we saw, again, some concerns about Europe and Asia. We also saw the trade deficit improved in the month of May. And we saw some weakness in the retails, and the weekly initial jobless claims also rise. Oil, as we said, continued to be weak, got all the way down to 111, ended around 113, and now crude is down 23% since those July highs. And as we go into next week, we're going to see whether or not the financial sector can turn itself back around. We saw our earnings estimates cut on Goldman Sachs. We also saw a warning from JP Morgan. So we know when we're looking for leadership, and we know the finance sector plays a big part of that leadership, and we don't have leadership in oil, where are we going to get that leadership to move the market higher? We don't have a lot going on in our news for next week, so what's going to be our catalyst? So tomorrow we have no economic data, but we do have BHP and Lowe's before market open for earnings report. And you can see this week we do have some Home Depot, Hewlett-Packard, GameStop, Dry Shipping, and Taylor, some more retail there. Some more, when you think about Home Depot and Lowe's, more state of the consumer, GameStop, state of consumer. And with oil down, maybe we'll see something from shipping. Here's our split plays. Let's go ahead now and take a look at our sectors. Okay, so now it's time to go ahead and look at our sectors, and we'll start off on our bearish side, and we have our old friend agriculture here. You can see we're obviously been in a nice downtrend. We've got some support here where we bounced here, this 325 range. We came up to resistance, looks like we're going to go lower. Energy, as we talked about, looking weak, although again, what we talked about last week is that we've got support here. What are we going to do? We got a little bounce. Now, are we going to go higher or are we going to go lower? Oil and gas, same thing here. We're at obviously a support, consolidating a little bit, but are we going lower? Metals looking weak. Do you see a similarity in patterns here? Look at steel, similar pattern here. Gold, Gold doesn't show the weeks of consolidation, so this one certainly looks a little bit weaker. And finally, on the bear side is railroads. I think we're in the beginning of a possible downtrend as oil prices are going down. Now, on the upside, we have a lot here, actually. We're going to go back to our consumers. Durables looking pretty good. Then we're going to jump to drugs. And what I like is that drugs is finally breaking above these wicks here, so liking that. Biotech looks good here, also breaking higher a little bit. Aerospace still looking good above the 50. We have our casinos looking good, staying above the 50. Retail's above the 50, making higher highs. We talked about that earlier. Airlines, we already talked about that. Trucking, again, oil down. And then last week we had computer hardware still looking okay. Electronics and software still looking good. Semiconductors still looking good. And finally, internet starting to make a little pub. Let's like to see it get above the 50. Okay, and now it's time to go to our education portion of our video. And we're going to take a break from Trading in the Zone by Mark Douglas. And I was reading a study on stock traders by Odean. And basically, this guy was a college student at, I believe, USC. And he and his professor basically did a study back from 1987 to 1993, and then they continued it from Odean continued in 1991 to 1996, and basically they researched a total of about 76,000 brokerage accounts, and what they found was that as a group of all amateur investors underperformed the market due to higher than necessary trading. Basically, trading the trade. And we were talking about this in the group this week that, the best trading is waiting for the perfect setups. You don't trade just to trade. And that's when I lost all my money. All my losing trades were based upon emotions. All of my losing trades were trading just to trade. All of them. So, he found that most amateur investors underperform the market because they overtrade. And in addition, if they would just had held on to those positions, they would have actually done better because those positions that they bought actually did outperform the market. But as usual, they snatched defeat from the jaws of victory by systematically selling the best stocks in their portfolios and holding on to the worst stocks too long. Why? Well, a lot of traders are buying stocks that moved too much up or down. They jump into stocks that caught their eye because of the sharp moves up or down, or because they're on CNBC with media attention. And so these momentum traders are jumping into the biggest gainers, and the bargain hunters are buying the stocks with the trouble issues. You have to remember, well, why is it going down? Why is it going down? And that obviously the following the crowd, doing what everybody else is doing, is rarely a successful strategy. And you may say to yourself, why did I bring in this one? Well, let's get to the point. Traders have a strong tendency to sell the wrong stocks. Selling a loser amounts admitting that you have to make mistakes. Ding, 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 ding. That goes exactly what we've been saying, Trading in the Zone, the book, and, the whole idea about overcoming your emotions. And, people hate to admit that they're wrong. Someone approached me yesterday. I went to a seminar on blocks, the new Warden product. They've got telecharts that I switched to, and now they have blocks, which is cool because blocks is free for end-of-day charts. Blocks.com. But here's the point: is that I was talking to this guy, and he was like, what's the best thing I can do? How long does it take? And I said to him, well, trading's not that hard. It's not that hard at all. The hardest part of trading is overcoming yourself. And, and this is right down the line of, can you sell a loser? The best facet of trading is sitting and waiting and being patient. And when you get everything aligned up, that's when you have your trade plan set up, your routine set in place, your criteria, your checklist set in place. All of these are your trade plan in action. And your setup comes up, and you get that signal to buy. That's when you're going to make your biggest winners. But when you're buying just to buy, when you're trading just to trade, you're setting yourself up to fail. So to get the full version with our picks of the week, go ahead and download the podcast, or you can go to the blog. The podcast version is up first. The blog gets up there last. But again, that 30-minute video that goes over things in much more detail than we can in this 10-minute video. If you're ready to step up to the plate and become a subscriber to our daily video trade plans, you can go to that link right there. And always, we appreciate your feedback. So guys, trade your own risk, and I will see you next time.